introduction to central banking, you are going to learn the definition of central bank. The definition of, that means the meaning of a central bank. And after that, you are also going to learn the names of central banks. You see, my dear students, when you come to the names of central banks, in different countries, the central banks are called with different names that you are going to learn. And after that, you are also going to learn about the evolution of central banking. Evolution means history of central banking, how it has been evolved from ancient, medieval and modern periods up to now, how central banking has been evolved from ancient to modern period. That you are going to learn in this unit. Let me discuss the meaning of central banking. So central banking is an apex institution. An apex institution. Apex means the topmost institution of a country. The topmost institution of a country, monetary and financial system. So when you come to monetary and financial system, central bank will be an apex institution, and it regulates, not only it regulates, supervises and promotes commercial banks and other financial institutions, that may be non-banking financial institutions or mutual funds or whatever it may be regarding financial institutions. All these will be regulated by the central bank. Not only that, it designs and conducts monetary and credit policies. So here, my dear students, a central bank will try to control inflation, and also it tries to create credit. So to discuss in detail, we are going to discuss in detail about central banking. A central banking plays an important role. It plays an important role in balanced development of an economy. Balanced means, so wherever you go, that should be developed in a balanced. So in some places there will be underdeveloped and some places well developed. So here the central bank plays an important role to equalize. So here wherever there is underdeveloped place, central bank with the help of commercial banks helps to develop those areas. So in that way, central bank plays an important role in the balanced development of an economy. My dear students, it is not easy to give any precise and accurate definition of central bank. The definition of central bank is largely derived from its functions. As functions of central banks vary between countries over time, so does the definition of a central bank. Different economists have defined central bank differently. In the opinion of W.A. Shaw, central bank is the bank which controls credit. Central bank is the bank which controls credit. And as per Hartree, the central bank is the lender of last resort. According to Hartree, the central bank is the lender of last resort. According to Kiss and Elkin, Central bank is that bank, the essential duty of which is maintenance of stability of monetary standard. Stability of monetary standard. As per R.P. Kent, central bank is an institution charged with the responsibility of managing the expansion and contraction of the volume of money in the interest of general public welfare. It is evident from all these definitions that various economists have defined central banking by laying emphasis on its different functions like control of credit, lender of the last resort, note issue, regulation of currency and credit, and stability of the value of money in the general public welfare. However, we may conclude that central bank is the highest financial institution of a country whose main function is to regulate, coordinate, integrate, and guide the monetary and banking structure so as to realize certain desired goals of national and public welfare. Next, we go to various names of banks. When it comes to names of banks of central banks around the world, there is no standard terminology for the name of a central bank. But many countries use Bank of a country. For example, Bank of Canada, Bank of Mexico, and Bank of England, which despite its name is in fact the central bank of the United Kingdom as a whole. And next, the word reserve. The word reserve is also often included, such as the Reserve Bank of India, the Reserve Bank of New Zealand, Federal Reserve System of USA, Federal Reserve System of USA, and some are styled as national banks such as Swiss National Bank, National Bank of Poland, and National Bank of Ukraine. For some countries, the word central is very important. For example, Central Bank of Ireland, European Central Bank, or some other examples. And in rare cases, central banks are styled as State Bank of a country. State Bank of a country. For example, State Bank of Pakistan, State Bank of Vietnam. And in some countries, the central banks are called as monetary authority of a country. For example, Saudi Arabian Monetary Authority, Monetary Authority of Singapore, Maldives Monetary Authority. Next, we are going to discuss about history of central banking. The use of money as a unit accounts predates history. The use of money as a unit of account predates history. Government control of money is documented in the ancient Egyptian period, that is during 2750 to 2150 BC. In the medieval period and the early modern period, a network of professional banks were established in southern and central Europe. The institutes built a new tier in the financial economy. The monetary system was still controlled by government institutions mainly through the coinage prerogative. Coinage prerogative. In order to consolidate the monetary system, a network of public exchange banks established at the beginning of the 17th century. 17th century, particularly the Amsterdam Vessel Bank. It is called as Bank of Amsterdam. It was established in the year 1609. The Bank of Amsterdam, that is Amsterdam Vessel Bank, established in the Dutch Republic in the year 1609, was a forerunner to modern central banks. The Bank of Amsterdam, established in the Dutch Republic in 1609, was a forerunner to modern central banks. The Vessel Bank's innovations helped the foundations for the birth and development of central banking system that now plays a vital role in the world's economy. The model of Vessel Bank as a state bank was adopted throughout Europe, including Vereges Rijksbank, which was established in the year 1668. It is the central bank of Sweden. And the Bank of England. It was established in the year 1694. Although this establishment of Bank of England marks the origin of central banking, it did not have the functions of a modern central bank, namely to regulate the value of the national currency, to finance the government, to be the sole authorized distributor of banknotes, and to function as a lender of last resort to banks suffering a liquidity crisis. These modern central banking functions evolved slowly through 18th and 19th centuries. And when it comes to modern period, Henry Thornton, a merchant banker and monetary theorist, has been described as the father of modern central bank. An opponent of real bills doctrine, as he was a defender of Bullionist position and a significant figure in monetary authority. So central banks were established in many European countries during the 19th century. Napoleon created Banque de France in the year 1800. In an attempt to improve financing of his wars. On the continent of Europe, the Bank of France remains the most important central bank throughout 19th century. Although central banks today are generally associated with fiat money, with fiat money, that is money which does not have intrinsic value. The 19th and early 20th centuries central banks in most of Europe and Japan developed under the international gold standard. International gold standard. Free banking or currency boards were common at this time. Problems with collapses of banks during downturns, however, led to wider support for central banks. The United States created Federal Reserve System through the passing of the Federal Reserve Act. And when it comes to 20th century central banks, 20th century central banks, after gaining independence, African and Asian countries established central banks or monetary unions. The Reserve Bank of India, which had been established during British colonial rule as a private company, was nationalized in the year 1949. Following India's independence, the People Bank of China evolved its role as a central bank starting in about 1979 with the introduction of market reforms, which accelerated in 1989 when the country adopted a generally capitalist approach to its export economy, evolving further partly in response to the European Central Bank. The People's Bank of China had by 2000 become a modern central bank. The most recent bank model was introduced together with the euro through European Central Bank, and involves coordination of European national banks which continue to manage their respective economies separately in all respects other than currency exchange and base interest rates. Many countries have state-owned banks or other quasi-government entities that have entirely separate functions such as financing imports and exports. To sum up, all developed and most of developing countries have central bank. All developed and developing countries have central bank. However, in most countries, the central bank is the 20th century financial institution. The central banks have very important role to play because it is the highest monetary institution and a leader of financial system of a country. The banking system can work efficiently only if there is an institution at the top to direct and coordinate its activities. Failing this, the banking system would be nothing but collection of unconnected units, each following and independent policy, often contradictory to each other. Thank you for your kind attention throughout my lecture on Introduction to Central Banking.